Dow shares down by 16% this morning. Let's catch up with Woo Jin Ho of Bloomberg Intelligence, who joins us now for more. Woo, can we just start with those numbers yesterday? Where was the grand disappointment for this market, given that we've got a single name down here by 15, 16, 17 percentage points all morning?
Hey, John. So there's a couple of areas of disappointment for Dell. It was probably the backlog number. First of all, the backlog numbers came in at 3.8 billion. I think the whisper numbers were much higher, especially given where the valuations were at the time. And then the second is the AI server profitability. It's probably going to be more earnings neutral versus a more typical 9 to 10% server profitability. So, you're not getting any return on your AI server numbers.
Well, Jim, can we just finish on that point? I think that's so important. Just elaborate a little bit more on that. That came up on the call. I think it was Tony Sacconaghi who asked the question about the margins on these servers. Are we saying that where they're going to get the best revenue growth in the future is from a product that dilutes margins?
And that was a brilliant question by Tony, quite frankly. And look, we have to keep in mind that we're still in the early days of the AI server boom, or the AI infrastructure build-out boom. And what Dell is coming up against is trying to gain footprint. And the best way to get early footprint is pricing. If we listen to Supermicro's earnings call about a month back, essentially what they said was that their margins were going to be a little bit dilutive from competitive pressure. There are a lot of deals that are out there, and the first to win those deals could probably have a long runway to win more server deals in the future.
Woo Jin, we've been spending the morning wondering whether Dell is sort of indicative of a broader over-enthusiasm of where AI is taking non-NVIDIA companies. I don't know how else to characterize them, but they seem to be the global winner in all of this. Do you think that's right, or do you think that this is a Dell-specific story and how they're trying to win market share, and what sort of services and hardware they're providing?
Sure. So I want to take that question in a couple of ways, Lisa. If we look at Dell's forecast, what I back into is about an $8 billion annual revenue in AI servers. Roughly 2.2 billion of it is coming in next quarter. They already booked 1.7 or recognized 1.7 this past quarter. That revenue is flattening out in the second half of this year. Given that there is this huge pipeline of deals that Dell keeps on talking about, the gatekeeper of those deals is still NVIDIA because they still hold those valuable chips, right? And depending on where NVIDIA want to send those chips, the vendor wins. Now, the second aspect of it is valuation. Prior to the print, they were trading roughly around 21 times forward earnings. This, at the end of the day, it's a hardware company. Before this AI frenzy, hardware names were trading around 7 to 9 times. So you're getting a 10-point premium just for the AI alone.